power is your biggest variable expense.
Our society today utilizes energy much more efficiently than a society from 300 years ago.
If we were to all be forced into electric cars tomorrow, the grid fails by morning.
You definitely don't want to be going into mining during the highs and the peaks of the bull market.
The modern designs that are being contemplated now are so much safer, you wouldn't even need to have the containment systems that the old designs have.
Well, Greg, I appreciate you coming on the podcast. I've been looking forward to this one, and I'm excited to hear about how you got into what you're doing at Stronghold, but what you guys are focused on today. So the floor is yours, my friend.
So yeah, I'm the CEO of Stronghold Digital Mining. I spent 25 years in energy investing in private equity. And as a part of that, one of the CEOs that I invested in is Bill Spence, who's my partner in this business. And because he was one of my prior CEOs I had invested in, although I hadn't had a professional relationship with him in more than 10 years, I always just stay in touch. And he bought one of the two power plants that Stronghold owns. And I think because he had health issues. And so he called me saying, "Hey, Greg, help me have a look at this power plant to see if you can help, make it a little better." And so I looked at it and got involved that way. The reason we got into Bitcoin mining, and by the way, I would have, had you given me 1,000 guesses as to what I would be doing post private equity, I would not have guessed Bitcoin mining public company CEO, as infinite number of guesses wouldn't have ever gotten it. But the reason why, I think, as you know, as a Bitcoin miner, power is your biggest variable expense, and the arbitrage between power pricing and Bitcoin mining economics became apparent to us when lots of Bitcoin miners were calling saying, "Hey, can we co-locate at your facility and buy power from you?" And so that's really what started for us to look at the economics behind Bitcoin mining. And we made the decision that it was better just to be a miner rather than be a hoster. And the logic behind that is, if the economics are good, you're better off being a miner and take those economics for yourself. And if the economics aren't good, if you're a hoster, it's more than likely that the company that's paying you to host is going to quit paying you. And so the downside seems to be the same, but the upside potential for mining is much greater. So I think a difference between Stronghold and others is that we're vertically integrated, meaning we own our own power assets, we run our own data centers, and we own our mining equipment. So I think the thought behind that vertical integration, it's key. And this is, something we should dig into, but the ability to sell power when power pricing is better than the economics of mining Bitcoin is key, or the ability to buy power from the grid at spot pricing when that pricing is super low is really important. And so most Bitcoin miners that don't own power assets, they really have what I think about as a one-way option. If Bitcoin prices and hash rate, makes sense and it's economic, you'll mine for Bitcoin. And if it's not, you won't. So it's just a on-off switch. Do you mine or not at a certain point in time? Owning the own power assets gives us dozens more options. We can cycle the miners off and on, mine at night and sell power during the day. If, like I said, the power prices are low, we can shut the plant off and buy power for cheap. Bitcoin mining profits are high. We can divert the power from the plant to the data center and not give any power to the grid or give a lot less to the grid. So it really ends up being a what I consider to be a giant sort of power pricing arbitrage machine, that's just much more interesting than just, hey, mine Bitcoin or not machine.
It's interesting. So I think we talked a little bit about this offline, but when I first came into the mining industry, I saw that these two industries were going to collide in terms of the energy sector and the Bitcoin mining industry. And so I think it's fascinating to see that you came from that background on the energy side, brought that into mining, and now you're running almost like this blended type of company. It seems like you're doing a lot of things, best practices from the energy sector, but then also implementing that with the Bitcoin mining economics. Kind of a random question off base, but what was it like when you first dove into the economics of Bitcoin mining? Because the economics of the energy sector, it's a very different return profile. So like when you started looking at mining, what were your initial thoughts?
You know what, my background in energy, I'm familiar with the oil and natural gas sectors and the economics of drilling wells. So I really thought it looked similar. So you have a big upfront capital expense, big capital investment, and that investment produces a lot of cash flow, hopefully in the first 6 months, the first year, and then it declines. And so it's really the rate of the decline curve that you're underwriting. I guess similar to oil and gas as well, it's the underlying commodity. Bitcoin is very volatile. And then, hey, the lower the price goes, then the lower the global hash rate might go. And so you then have a kind of right way risk on that front. The higher the price goes, the more people add machines and the hash rate will go higher and diminish your economics that way. But I really thought it was very similar to the economics of drilling a well and watching that well decline in production over time. I would say the downside of Bitcoin mining versus say, oil and gas investing is that in oil and gas, you can hedge your production. So once you have a production online, you can hedge a year to, say up to 5. I can hedge even 10 years of my prior life. And Bitcoin, you can do hedging, but it's so expensive that you wouldn't do it. And people that mine Bitcoin generally aren't as bearish as most on the future of crypto and Bitcoin. So it's just not a useful thing. But I modeled the economics myself. I didn't call someone else and say, hey, look at this for me. And it's really not all that complicated. You only have a few variables. The complicating part was blending Bitcoin mining into power and then understanding the operational capabilities of a plant, because a power plant can't be shut off and on in seconds. But you can do things, we have invested in software to turn a data center, our Bitcoin mining data center can be turned on and off in seconds. So it's just understanding and then modeling in a financial way what's possible operationally. But yeah, I think initially, there's no doubt. I thought, quit my job at Apollo, now I'm going to be doing Bitcoin mining. It was a little crazy to contemplate that being like my next step. But hey, having done the work on it, I think the risk-adjusted returns can be there if done in this vertically integrated way. So yeah, I became a fan.
I think the way you're doing it that's where a lot of miners are going. A lot of miners right now, they don't have that full understanding of the energy side the way that you do. But I think that's where the industry's going. So going off of that, today, you guys have your own vertically integrated operations. And then I'm assuming that you're trying to find the best way to build in the bear market, right? And in the past, you see these bull and bust cycles. You see the miners who over lever and take on bad debt during the bull cycles struggling a lot. And then you see the other ones that took in their capital, held on to it, and are ready to reinvest when prices come down. Like today, I think last time I checked, it was like just under $20 a terahash, something like that. Maybe actually might even be lower now. It's a lot different than when it was like, up around $100 a terahash for similar miners. So the timing of these cycles is so important. And that's actually one thing that Fred from Marathon had mentioned, that they focus on really trying to time the cycles, because that seems to be the biggest variable. With all that said, though, what are some of those insights or keys that you guys think of when you're approaching these different cycles, the bull market, the bear market, and the different levers you can pull? Because it's very different, not only from an operation and acquisition of miner side, but the actual cost of your access to financing completely changes as a miner during these times. I'm just wondering, how do you think about it? And are there any things you've noticed that people might not be very aware of?
Hey, the financing, let's talk about how the mining market is financed, right? It's typically a hedge fund style financing that has a 2-year amortization. So if you borrow money against your mining fleet, you're expected to repay that capital within 2 years, which is an extraordinarily fast amortization. And so I expect that with today's economics, miners that bought machines at over $80 a terahash and borrowed, half of that, or borrowed, $40 a terahash, they are not going to be able to afford to repay that debt. And so surely they are reaching accommodations with their lenders, with those hedge funds, or banks, and they're having a suspension of payments on their principal and interest. My view of the market is that I don't think the market really recognizes what that circumstance that, hey, people argue, well, hey, I can break even at $10,000 Bitcoin. And that doesn't reflect the amortization of the debt. And so I think most of the guys that borrowed a lot of money need Bitcoin to be above 30,000 in order to amortize the debt. So I think we're going to see a bunch of restructurings of debt and a few bankruptcies if this crypto winter lasts another year. Interestingly, I think everyone's been talking about, hey, when will all the mergers happen? We need consolidation in the sector. And in a strange way, the over leverage of the system makes the mergers impossible. Because you can't, who's going to want to merge with a guy who faces bankruptcy risk, who needs Bitcoin to go from 20,000 to 30,000 to be able to afford his debt? It's like no one's going to want to take that equity. The public equity markets, I think, do not recognize this quite yet and still view these miners as a big option on Bitcoin. But it's a risky option on Bitcoin, given that if you don't see higher pricing, effectively those businesses are going to end up being owned by the lenders. So Stronghold is a bit different in that when we borrowed our capital from our hedge fund group, we did not structure the debt with a corporate guarantee. So Stronghold Inc. is a public company. We had Stronghold create an LLC that borrowed all the capital, and all of the miners that we bought and put leverage on were held in that LLC. And we bought a bunch of miners at too high a pricing, and what we owed on those miners is probably pretty close to double what you could rebuy the same miners for. And so recognizing that the lender really had an equipment loan, not a corporate loan. So I called the bank and said, hey, I'd like to restructure the debt and lower the principal amount due to reflect the reality that your collateral is worth half of what's owed on it. And they chose, I think probably more bullish than me on where the equipment market might go, they chose that I return the miners to them, which is what I did about 6 weeks ago. I returned the miners to them thinking that I could rebuy them for maybe a 30 or 40% discount. And given what's happening even in the past 6 weeks, with a flood of miners hitting the market, hundreds of thousands, if not millions of miners unplugged on the shelf, you can now buy like an S19J Pro for $20 a terahash, which is the number you sort of quoted a few minutes ago. So I think Fred is right. Where you buy is a big determinant of what your future holds, unless you're clever enough on the structuring side to borrow in a way that makes it the equipment lender or bank's risk more than the borrower's risk, which is how we did it at Stronghold. It's our stock price has not done well since then. I think the market sort of probably perceived that if you sort of draw the analogy to like a car loan, it's like, hey, we sort of toss the car keys back to the bank, and then the market says, well, these guys must be not driving any longer. It's like, no, we're going to drive probably the same car or better, but at half price.
That's interesting. And to your point, I think that a lot of times this is one of those markets that's so, even more so than other industries, just like sentiment driven. And when everyone's hearing about certain things happening in the mining industry, we just saw it with, the valuations on the more consumer focused companies, kind of like the BlockFis or the Coinbases or the Celsiuses, the valuations are just crazy in terms of how much they fluctuate. I think BlockFi went from like a $4.8 billion, like something like their Series E or something, to all of a sudden with FTX looking at the optionality to acquire at like 25 to 240 mil, just like cents, like not even like really cents on the dollar. I think in the mining industry, it's interesting because I had no idea that was the case in terms of, because I feel like a lot of miners didn't have foresight to do something like that, where they put and allocated their risk to like an LLC subsidiary. But if the market is just looking at it, a lot of these miners purchase equipment at certain prices, and then all of a sudden the market tanked, then they made a purchase where a lot of value has been eroded and erased, and they have to find a way to pay off that debt. For those who, I guess, planned ahead, it's a lesson for future bull and bear cycles where you want to make sure that you're putting your risk in the appropriate areas, and especially with mining. This is another part that's crazy that I'd be interested to hear your take on, is the volatility in mining. It really seems like the amount that it fluctuates it's almost unlike other types of equipment markets, right? Because the pricing on it can vary so quickly. It's not necessarily being priced at the marginal cost of production for that piece of equipment. It's more so based on, how quickly can this machine pay itself off? And that's completely tied to the price of Bitcoin. So it can just fluctuate an unbelievable amount in such a short period of time. So when you guys are looking at that, how do you, I guess, model that out, or how do you approach that? It kind of seems in today's day and age almost like an art and not necessarily a science yet. And I've spoken with a couple of different miners. They've got different approaches, but I'd be curious to hear how you guys look at that and know, this is a good time to be looking at actually purchasing miners, or, hey, this might not be the best time. And then, taking the lessons, obviously, that we saw in this bull market and bear market. How are you looking at that?
Yeah, so I think the way you're describing the equipment market is absolutely right. I think the one thing that people probably don't talk about too openly is that the amount of leverage that sort of the two main equipment vendors have had in the past, where you actually have to pay half of the purchase price upfront, or agree to like a delivery contract over a year starting in 3 to 6 months. So they're really using your deposit dollars to buy the chips and make the machines. And so I think they probably have negative working capital, even if your deposit is probably more than what the machine cost to build in the first place. And that's, half the money or even less in some cases. So I think in a robust market, vendors can do that. So I think that may change, where right now with the glut of equipment, I think most people say, why would I sign up to a long-term future contract for deliveries when the spot market is cheap and available and you're not having to wait and risk deposits and delivery schedules? And those contracts are not in the favor of the buyer, and they're really in favor of the vendor. So they can be late and there's not much you can do. Obviously, that there are rumors that vendors would even build the machine, run it for themselves for a few months, and then clean it up, package it new, then ship it off. It's a fairly attractive market for sellers of equipment because, hey, there was a chip shortage, there's logistics issues, and Bitcoin went from 3,000 to over 60,000 in a year. So it's about as bull market as you could come up with for vendors, and they did the right thing. And they squeezed buyers, raised prices from, I think prices were about $12 a terahash when I first saw this, when I was doing the modeling myself. And they went over 100, which is what you pointed out, in a very short time frame. The cost to build those machines did not go up 8x, or anything close to it. So it was all margin for the vendors. So yeah, I think the reason that, hey, we're all in the business is that we're bullish on the product that mining can bring. And the reason to potentially enter into a future contract is that the efficiency of future machines is better than current machines. So if your cost of power is higher, you need more efficient machines to make your margin. And so, but I would encourage those that are interested in mining to really look at the efficiency, the cost of that efficiency, the cost of that capital, because it may be the better choice is to get a great machine that's maybe last year's model, third of the price, because the payback on that machine is probably half of what the latest and greatest machine would be. Like, I think some people are very, hey, you just want to own the latest. And that's great, but I'm in this to make the most money with the least risk. And that's how I approach it. No one sees or really cares a Bitcoin mine. Well, was it mined with an XP or an S19J Pro? It's like, well, who cares? So we try to look at this from a capital efficiency, risk-adjusted return standpoint, which might not lead you to the latest and greatest equipment.
I feel like what you just outlined in the way that you look at it, it's very it's with a very logical type of approach in terms of understanding you're trying to produce Bitcoin at the lowest cost possible. And what's the best way to do that? What are the levers you have? Financing, access to capital, access to machines, all these cycles. With all that said, I'm curious as to your opinion on where you think the industry is moving, right? And we've been seeing the clear trend of, going from one early days where people could even mine full Bitcoins on their laptop to today where you just have an industry that's just growing and having new products built. Now we're even talking about things like options that miners will have with options and hedging hash rate and those types of contracts. I'm curious as to what you think the winning miners of the future are going to do and what the approach and industry is going to look like during the next cycle or even the cycle after that over the next 1 to 2 halvings.
So what's clear to me and what has been clear is that this is you need industrial scale to make the margins work. So the days of having your, sort of stealing your parents' power in your basement and running machines, you're just losing too much money to do it. And so that's over. It's the days of the laptop mining, that's long gone. Small scale operators, they're gone. Even people that are hosting or paying for hosting, if they haven't already, they should be recognizing that the security of their hosting contract. They thought they had a great deal in a hosting deal, and their hosting provider goes bankrupt. So now the PPA that they thought they had throughway to is gone. So I think we're going to see people really recognize that Bitcoin mining is sort of an adjunct to the power business, and you'll see power producers like us get in the business, and it's needed. So it's needed because you can't do this without scale. Even understanding what's needed to mine, that's an industrial scale project, from buying the transformers, doing the one lines on the engineering, figuring which pods to do, working on either airflow issues or the more modern method is to do liquid immersion to keep things cool. I think what we're going to see in the future, which is what we're doing now at Stronghold, is stabilizing the grid while running our data centers. So I think what people like the average American says, hey, who doesn't love green power? I do. I have kids. I want a cleaner, greener planet. But if you ask me, hey, do you want green power? If you had green power, would you be okay if you didn't have power, a third of the time because the grid couldn't handle it? It's like, and would you be okay if your power bill was 3 times what it is today? So like, I think if we continue down the path that we're going on greening America with solar and wind, we're going to end up with power costing 3 times what it used to cost, and we're going to end up with blackouts. And that's simply because we were taking a base load supply of power, fueled by fossil fuels, and replacing it with an intermittent source of power that on an apples to apples basis is 3 times the cost of what we had. And so, hey, we're not going to do that. Obviously, Americans aren't going to be willing to live in the dark. And I think we're probably being accidentally coaxed into paying 3 times for power. I think if that's happening, it's going to make people upset, particularly as we sort of enter a recession. But one of the ways to mitigate the reliability issues caused by the installation of solar and wind projects is Bitcoin mining data centers that can toggle on and off to replace the lost supply when the wind isn't blowing or the sun isn't shining. And we had a pilot project at both of our sites that was approved by our grid operator that essentially says when the grid needs the power, and they can call it from us within a couple of minutes, and they call the ball and they essentially say, hey, shut down the data center and divert all the power to the grid when it's needed. And we're happy to do that. And so that is a stabilizing agent for a grid that is being sort of inadvertently made unstable by the installation of all of this intermittent supply. So where's the future of Bitcoin mining? It's industrial scale projects owned by power companies that run the data centers with the grid stability in mind that makes the whole thing work. Because without that, we see what happens, like the sort of the Californication of the grid isn't great. It's a lot more expensive and a lot less reliable. So I think Bitcoin, if done right, can be a stabilization agent, which I received my letters from Elizabeth Warren and others and explained very clearly. Stronghold is actually cleaning up a nasty environment. I haven't talked yet about what our source of power is. And as we're cleaning it up, we're making the grid more stable. Meanwhile, all of the incentives Congress has put in place is making the grid more expensive and less stable. A Bitcoin can help make it survivable.
Yeah, what you touched on there, first off, I agree with everything that you were saying there. I think that I share that belief that a lot of people are going to come to the realization that Bitcoin mining is the killer application for the energy sector to be able to fix a lot of those issues you just outlined. But on top of that, just like taking it one step further, I think that what makes Bitcoin mining so great is that it can be placed anywhere and shut off on a dime, as you mentioned, and that helps stabilize grids. And the sun's not shining 24 hours a day, the wind's not blowing same way every single day. And these are intermittent sources of power, as you mentioned. And I think that one of the biggest conversations that I'm not sure if you've been following is this utilization of capturing methane for Bitcoin mining. That I think is a powerful narrative to talk about in regards to Bitcoin mining, just because it is a clear way that you can combat climate change and global warming, because there's a waste that's just currently going up into the atmosphere, and then capturing that, being able to utilize Bitcoin mining to capture that. I think that the entire conversation around the environmental piece of Bitcoin mining right now is almost like being framed in the completely wrong way. People are just looking at one side of the ledger, looking at the energy consumed. They're not looking at the benefits of stabilizing the grid and a lot of these things that you're mentioning. So, I mean, on that particular front, on the environmental side of things, when you talk with someone who's saying, oh, you're a Bitcoin miner, like, isn't that killing the environment? How do you normally respond to that? Is it with that conversation track of how you're helping stabilize the grid, or do you speak about it in some other type of a way when you are asked that type of a question?
Easy for me, because my source of power is from cleaning up and reclaiming waste coal properties. So
yeah, I'd love to actually dive into that and learn about how that works, because that's one area that I don't think we've talked about on the podcast at all.
Yeah, so the 2 plants that Stronghold owns are called waste coal plants. So that's really a result from more than 100 years of coal mining in Pennsylvania. When the coal was originally mined, it was brought up from beneath the water table, from beneath the surface, and about 90% of it was great. It was used to make steel or make power, and all that coal built cities in America and helped us, win World War II. So we needed all of that product. But the 10% that wasn't good enough because the BTU content was too low, because maybe it was on the edge of the coal seam and or it had other properties that just made it not usable. All of that coal was just stuck at the side of the mine mouth. And now they're now called, there are 800 of these piles. And I use the word pile thinking like it's a pile of leaves, like it's a small, pile that would fit in your driveway. That's not it. These piles are actually mountains now. And it's probably billions of tons. So now we've taken a product that is high in sulfur, high in other contaminants from beneath the surface, beneath the water table, and now put it on top. And so whenever it rains, piles that they're not going to just go away. Whenever it rains, all of that water seeps through these piles. The sulfur and all the toxins end up in the groundwater. So if you looked at many rivers and streams and lakes in Pennsylvania around mining operations, they are red, and it's from essentially sulfuric acid, car acid, battery acid that is getting into the water. Of the 800 piles, about 80 of them are currently on fire. So they get hit by lightning, or if they will oxidize and smolder. And so when they burn, all the carbon in those piles end up in the air. And with no emissions controls, you get sulfur, and you get all of the cancer-causing agents in the air as well. So there's one solution to cleaning up the piles. And it's to use bulldozers, front-end loaders, excavators, dig it out and put it in a purpose-built furnace that will burn it with emissions controls that eliminate 99% of the cancer-causing stuff and leave behind communities that once had vibrant mining operations and employment that now have smoldering piles of waste that wreck their groundwater and make it uninhabitable. So it's really, I view it as fixing a class warfare problem. These communities are small and have no voice anymore. And so there is no, and you can't sort of toss a handful of grass seed on these piles and pretend that they're not there. People that live near them end up with higher instances of asthma and cancer and everything else. So, it's not pretty to look at. It's not, by the way, until you clean it up, but it's a big problem. So know that what we're doing has a problem that exists, is more than 100 years old. If there were another solution, what is it? We're 100 years in. So 25 years ago, Pennsylvania, bipartisan way, encouraged power plants that burn this product that are super expensive design and build, because they're not thermal coal plants. These are custom designed plants to burn this low BTU product and clean up the waste. The state knows that they need this stuff cleaned up. It's a blight on the state, so reputationally, to have these things around. And so they've incentivized the construction of these plants. And we work in partnership with the EPA. We work in partnership with the DEP. They're the ones that call us and say, hey, Stronghold, will you please clean up this pile over here, and we'll pay you for every ton that you remove. So I think the way I describe my business is that we're really a reclamation company where the byproduct is power, and the best use, most high margin use for that power is mining Bitcoin. So I think you could look at, hey, for every coin we mine, we clean up, a few thousand tons of this waste. So yeah, I guess I fully refute any, hey, Greg, you're doing environmental damage. I think I'm the only guy, I think those that are using hydro or renewable energy, yeah, I commend them for their choice to not further pollute the environment, but what we're doing actually cleans it up. But I think if there's a criticism, it's that our process emits carbon into the atmosphere. And my response to that is all the carbon in these piles will end up in the atmosphere anyway, except when it's reclaimed through our process, we eliminate the truly nasty chemicals and products, and we end up with a clean land, rehabilitated land and water that's cleaned up. So I will, go to my grave telling you that we are doing the right thing by cleaning up these sites. And mining Bitcoin, it helps it happen more quickly. And, I would say these plants were probably in danger of being shut down because power was so cheap in this part of the country that it was difficult for them to be, viable.
Yeah, that's fascinating. I'd never had someone walk me through that process. And so when you're going through this whole process, and in a way, it's different than the methane approach, but in a way, it's similar in the sense that you're taking something that has these negative externalities, you're taking this waste, and rather than just allowing those externalities to continue to exist, you're finding a way to utilize it for something productive, helping the communities, bring jobs, but then on top of that, support the Bitcoin mining network as well. In terms of outside of the energy business side, how have your views on Bitcoin? I guess, yeah, overall, like, floor is yours. What's your view on Bitcoin and the value that Bitcoin has?
Watched one of the sort of Bitcoin industry leaders on CNBC last week, and his view was every government that can print its own currency is going to print it to the point that it makes the currency worth less. And that happens 100% of the time since the history of currencies, which is why, a gold is cheap today, but relative to what it was, 2 years ago, but it is still a more stable store of value and a more sure store of value than a government printed currency. And that's just human nature. Governments are populist machines. They will lever themselves. And I think we are printing our way out of our leverage. And so I think that, which is a smart thing to do. If you borrow way too much money, make that money worth less. If you can still grow your economy, I think our debt may actually be on an inflation adjusted basis. The U.S. debt is actually declining, which is the whole. No one's going to admit this in a government forum, but the only way out of our debt crisis that we have created is to inflate our way out and make the debt small relative to the size of our economy. So inflation does that. So we have a sure bet. We are going to have more US debt, and we're going to have, and the US dollar will be worth less in 10 years than it's worth today. And in 20, it'll be worth a lot less. And you can look backward, and it's been true since it was, taken off of the gold standard. So that's a sure bet. With that in mind, hey, is Bitcoin the best way to hedge that sure thing? In the long run, possibly. In the short run, definitely not. But I think that's the purpose, and the spirit of Bitcoin was the US dollar, and not just picking on the dollar, any government mandated or printed currency is a sure bet to fail or become diminishing value just by design. And that has to be. And that's not necessarily a terrible thing as long as it's a slow erosion instead of a collapse. But I think what we've seen is really it's becoming more, if it wasn't clear before, it's clear now. The printing of the extra few trillions of dollars in the name of sort of COVID recovery that probably wasn't needed in the first place. It's sort of populist money printing that created a giant bubble in the equities markets, created a giant bubble in the tech equities markets, and Bitcoin traded in sympathy with that. So if your portfolio in tech just doubled in value, which it did during COVID, you probably felt rich. You probably said, well, I'm going to take some of my extra value and put it into Bitcoin because it's the next thing. And now that we're in reverse, that the coin bubble has burst with the tech bubble, and we've seen that Bitcoin really trades, instead of trading with gold, it's trading as a derivative on tech equities, which in a bubble market can happen. And so now we're sort of stabilized around 20,000. It's too tough to say, hey, when will Bitcoin recover? What will the future hold? I wouldn't be doing it if I didn't think it had a bright future, but it's difficult for me to really bet on a Bitcoin pricing recovery until equities recover. And equities are not going to recover until the Fed quits raising rates. They're not going to quit raising rates until inflation's under control. And I don't think inflation's under control. And so I would not, so I think I guess my position is still one of being defensive. And so, but if you ask me, hey, will Bitcoin be higher in a year than it is right now? I don't know. I think you really have to plan for a really tough time, because our government put us in a horrible position. It's almost like the legislative and executive branch is now fighting the Fed. It's like, hey, well, every trillion you printed is going to cost us, 75 basis points in interest rates. That'll probably be something about the math that'll end up at the end of the day saying, well, if you overdo it, now we need to cool it off. And just the toolkit we have to do that at this point is, our toolbox is kind of empty. We have just a hammer in there, and that's just interest rate manipulation.
Yeah. And I think the Fed just raised by 75 basis points, right? And I mean, this is an impossible question to really have like a clear answer to, but I'm curious as to diving a little bit more into what you had mentioned earlier with that portion of like, what is the Fed going to do, right? And how you were thinking about it. Okay, well, they've made a commitment. They're going to go and try and get inflation under control. It's obviously very difficult with the amount that's been printed. And
Yeah.
you're also looking at what everyone's talking about with shortages and supply chain constraints that might be on the horizon, rising prices. So with all that said, what's your sense of how they get that under control? Obviously, it's by raising rates. How bad or how long do you think that those types of rate rises are going to have to be going on? And how does that play into your general outlook on the economy as a whole?
We have issues, and they're not just here, and I think the answer to the question is like, hey, what will, a big component of inflation is energy, and that's going to impact people. I think people this fall are going to sort of now, they're not getting their bill from August, and people's power pricing is high, I guess a lot higher than it was, probably higher than expected. What happens in Ukraine is going to impact, and Russia is going to impact inflation in that's a big portion of the metric. I guess you're sort of underwriting war games to then guess inflation outcomes, which is tough to say. But I think that theoretically, the Fed needs to raise rates to match the rate of inflation, but it moves down. So hopefully, if inflation goes, from 8+% down to, 4%, then they can be pretty close to being done with rate increases. But if it stays at 8, and they got to keep marching up to match it, and we'll see what happens. I think the big mystery will be the components that make up inflation. Like, what are they really looking at? Because they're saying, hey, they want to limit inflation to 2%. I think that's the stated goal, and they'll probably begin to manipulate what they mean by 2% by saying, hey, it's 2% if you exclude energy, or if you exclude food. Or, it's like, well, why, do you not use energy? Why are you excluding things? So I think they'll probably, they may begin to say, hey, they're hitting their goal. If you, look at the fine print, it'll be a bunch of things excluded in the asterisk, to count it. I think I guess this going back to this, I saw CEO last week saying, hey, the Fed is, Bitcoin is down in part because the Fed is doing its job to control inflation. And these are sort of the adults in the room controlling it. And therefore, we're seeing sort of Bitcoin not do all that well. And I think that is absolutely incorrect. I think we have children that printed all this money in the first place for populist reasons, not economic ones. Maybe in the first half of COVID, when it was a mystery what was going to happen, yeah, of course, get ahead of it. But when it became clear that it's not all that dangerous and it was going to go away, and when it quickly became like this endemic, all right, why did we print the extra 3 trillion? I disagree. I think Bitcoin should be reacting to the fact that, hey, these guys are not protecting our currency, and they're now having to behave. The Fed's actions are in response to recklessness, not prudence. I think we should be bullish on it. But hey, what happens with interest rates? I think they'll keep going. And I think what they always do, if you were to study the past, is you have to, if you sort of telegraph to the market, hey, we're going to raise rates like another 200 basis points, you would then see a whipsawing market mostly go down, downward, and reduce the chance for a soft landing. And so I think you see a market collapse, then you can see jobs collapse, rent increases go away. Like we've already, not that I want to make this like a political thing, but that 3 trillion of extra money so far has probably cost the U.S. economy probably 20 trillion. We've seen 8 trillion wiped out of the equities markets since June. And that's not, probably the biggest component of value is the housing market. And that no doubt has seen north of 10 trillion in value erased. So if you go back in time, you'd say, just guys, don't do it. Protect the currency, protect the economy, but it's just too tempting, which is why it's like, hey, why is Bitcoin going to be, going to work? Is because they just can't help, or those that administer our currency cannot help it.
Bitcoin, it's interesting because it is tied directly to free market principles with mining, which obviously better than almost anyone out there, right? What supports Bitcoin is the free competition of earning those new Bitcoins, minting it, tying it to real world energy, real work that it takes to mine a Bitcoin. Then all of a sudden, when you look at the printing that can go on, that is detaching actual free market competition and the real world value. Because if you can just print it away at the marginal cost of 0, then allocate that somewhere else. That's not free market driving where those dollars go and are being spent. It's completely unrelated and tethered to wherever group that didn't earn all that money in the free market decides to put it. And so, yeah, I think it's fascinating. And hearing you outline how much value has actually potentially been erased when you look at equities and these other things, that was fascinating. I hadn't thought about it that way, but yeah, that's a good point. I mean, the economic warfare and all these other areas, it's interesting to see how it's playing out. I just thought it was unheard of when all of a sudden we heard about how, I don't want to mess up the amounts, but all of a sudden how we can just take over the reserves of the dollar, of the dollars that another country holds, right? And so, for example, we're going to take X number of billions of dollars that you hold in this currency, and we're not going to recognize that, and we're going to reappropriate it to another cause. I think that, and I'd be curious to hear your thoughts on this, but there's Bretton Woods, and then I feel like we've entered like a new age, like the next evolution of Bretton Woods, in the sense that the dollar is it can no longer be trusted as a reserve currency that can be protected if you're another nation that's holding dollars. And I think that once you cross that type of a boundary, it completely reshuffles the deck in a way of, you're not as willing to hold dollars if you know that the US can suddenly just take those dollars and not recognize your holdings in them. So from the economics point of view, I'm curious as to like your views on all this and how you think about that, being involved in the whole machine, so to say, from running a company. Like, how do you assess that type of a risk, like the geopolitical or regulatory risk?
The US has a gigantic benefit that nothing is, no one can compare. Being a reserve currency lets us print away, right? So people tolerate it. So, hey, why are they able to do that? Well, the taxing power of the US government is also second to none, right? So, you get the tax bill from IRS, you actually pay it. In theory, it's like, hey, all of that debt and the ability to print the money that's backed by strongest economy in the world, even if we're, in a recession, that's worthwhile. Of course, if our competitors globally see us with this reserve currency, and that advantage that we have, if it could be taken away, would really hurt us, because then we couldn't print like we print. It's like, all right, if we print the money and only US citizens buy debt, that's a much different thing than having a globally funded growth. If you look at the growth of the US, hey, a lot of it's debt funded, and a lot of it's debt funded, not the majority, but by external economies, because of the perception that it is the most stable of the currencies. I would say, but if I'm no longer going to trust the US dollar, where are you going to put it? Where are you going to buy your US Treasury equivalent? And I'd say, as we are, knowing that we ultimately will inflate ourselves down to a diminished value per dollar, I would suggest that other countries have even less discipline. And I'm not sure that if I were running the economy of a third world country, you're probably not going to be well advised to hold all of your reserves in a much less stable currency. As much as I'd say, hey, should you hold your assets in Bitcoin or in US dollar? If you're comparing it to most, if you have 140 countries in the world, probably 30 of them, you would say, fine, you'd sort of be willing to take currency risk, but the majority, you would not. I fear for the loss of the U.S. having the reserve currency. And I can tell you that's got to be the Fed, I'm sure, is panels and executive sessions monthly, weekly, or even daily, just to say, how do we make sure that we keep this status? Because it is really harmful if we lose it.
Yeah. And going off of this point, we recently saw the Inflation Reduction Act, and just the amount of money that is going to be going into the renewables industry in some way, shape, or form. I'm curious, like with your background in the energy markets, what do you think the ramifications of that bill are going to be? I'm not sure if you've had the chance to dive into it, or if there are just a couple key things that you want to mention that how you're looking at it from your seat.
I think we're going to see, I'm a big fan of nuclear energy. It's nice as solar and wind seem. It's already done. And my view is not going to change what's happening. What's happening is we're going to fund these things and build them. And I think it's not a great answer, but that's what we're doing. But I think it's argued that, hey, solar is on par with natural gas in terms of cost. And that might be true if the sun is shining, but it doesn't shine all the time. So to replace a 100 megawatt, natural gas fired power plant, you would need to build a 300 megawatt solar field. And then, because during the day, you need to charge all these, batteries to be able to power that same amount of demand at night or to handle the peak demand, the peak load. And so it's not, you can't, a 100 megawatt solar field is not anywhere near the same as a 100 megawatt gas plant, because you need to have a massive, think about the amount of pollution required to create a couple 100 megawatt, battery pack. And that battery pack will last, 5 maybe 10 years max. It's kind of gross. And we're really foolish not to look at it like the right and an equivalent way. But hey, I guess the solar lobby, they're better than, they sort of defeat rational thinking. So I would argue, hey, what we're doing, it's just going to end up, we're going to end up with more solar and wind that is a super inefficient, probably just as dirty, maybe worse than even what we had. And we're doing it while the answer is sitting right in front of us, and which is a carbon-free, massive baseload source of power is nukes. And thankfully, I think as a part of that bill, I think we're actually having some incentives to not shut as many down. And so I think we'll see a couple of big, I think we've got something maybe around 100 plants in the US. Maybe we'll see some not get shut down, because that in my view is the best way to make power. I think as a transportation fuel, like you'd hate to burn oil. Like oil to me, that's like the amount of energy content in a barrel of oil is a miracle, so don't waste it. Don't convert it to power when there's a better way. For power, use nukes. For transportation, use oil. That's the at least like airplanes. Like cars, you want to have some, like hybrids are probably the most efficient way to do cars instead of all electric. Like again, because the grid, if we were to all be forced into electric cars tomorrow, the grid fails by morning. Cannot charge all of the grid is not set up to answer the power needs of an electric vehicle fleet as Americans currently live. So something has to change. So I kind of liked it that the gradual approach was, hey, why don't we do more efficient hybrids that maybe do 50 or 100 miles of battery, which is probably most people are going to be all electric anyway, and then have the combustion engine there for when it fails. I had a Tesla for 5 years and I sold it, and I got the one that had the big battery pack in it. I sold it when I couldn't make 100-mile round trip on a cold day to like a kid's sporting event. I sold it the next week. It's like, all right, the thing's supposed to go 280 miles. And now it's like four something years old, and it couldn't make 200. So like, just like the battery in your phone, hey, that's what happens to your car. So, and maybe now with the new ones, they go 500 miles, maybe they diminish down to, 350 or 400. But I think as society, we're sort of falling for the argument that it's greener and cleaner, but it's probably not. So I think we're making mistakes that are policy driven. But again, they're made, and we're going to do it because it seems to be, that seems to be working for those that are making the decisions. But I think as we see people's power bills triple, which we're in the process of seeing, it's already happened in California.
Wild how expensive power is out there. It's over 50 cents a kilowatt hour at this point.
I think those that mandated the sort of had policy that caused that to happen aren't unhappy about it. That's the great. It's such a. If you think you're a progressive politician, you're not just making power prices expensive for rich people. It disproportionately impacts poor people. A guy who's like balancing his budget probably can't afford a $200 to fill up his gas tank. Probably can't afford to have his power bill go from $80 a month to $300. But they're doing it like unapologetically, which is regressive. And it's not even going to result in a cleaner planet. That's the crazy part. Like, well, where are all these batteries coming from? Outer space? No, it's mined, and it impacts water. And it doesn't even last that long. The solution is nukes. So if happy the day that government just say, hey, how do you make nukes more inexpensive to build? So one, if you have a current, it's really the permitting and the disaster recovery or disaster prevention that makes it so expensive. The modern designs that are being contemplated now are so much safer. You wouldn't even need to have the containment systems that the old designs have had to have. We're running nuclear power plants on craft carriers. So, and have for a long, long time. France has, I think, 80 small nuclear facilities, and they do it without incident. The government could say, hey, here's a pre-approved design that is sort of, that has a fast track through permitting where it's put. That ought to be what replaces coal-fired power plants or gas plants. That's much, much better for the environment and for society than what we're currently. But I think I'm a minority voice.
I feel like disproportionately large number of people that I speak with who have a background in energy end up becoming very pro nuclear power. And so I'm curious, why do you think that we haven't utilized, or actually, I would say that the better question would first be, if you were to list out the key main reasons why you think nuclear power is great, and I mean, you've touched on some of them already, like the baseload demand, things like that. I'll let you lay it out how you think through it. But then after that, I'm curious as to why you think they haven't been as adopted despite having a lot of these benefits. So I'll leave it to you to approach that how you like.
Yeah, no, it's carbon free, which is that's the moniker of the day, carbon free. It's base load, meaning and it runs around the clock. And we have facilities that are decades old, like 40, 50-year-old facilities, so they last a long time. But they're unpopular because, hey, when they fail, it's catastrophic. So who wants to live next to the potential of a failure? No one, understand it. But if you looked at the amount of deaths from nuclear accidents, it's a fraction of about anything else. It's like, hey, what are the number of deaths from mining lithium, or the deaths from mining coal, or the deaths from all the pollution that that the unfriendly types of power causes? We shouldn't have nuclear accidents, and they're not excusable. But even if we have them, they're still exponentially safer than what we're currently doing. I'll bet more people have died in wind farm installation, and road accidents or falling off these things than have died in nuclear power accidents. I mean, I don't know the stat, but it's out there, and it's probably safer than wind if you count up the deaths related to all of the making of that product. Hey, why isn't it happen? There are sort of two companies that have like nuke designs, and they've competed with each other. And both of those designs, at least in the US, Westinghouse and GE, they are very expensive and huge. So if you want to build one, great. If you want to build a 2,000 megawatt nuclear power plant, go to one of those two guys, and they're huge on a capital basis and require footprints on land that are unviable today. And so it's like, all right, who wants to build a $5 or $10 billion facility and fight your neighbors and fight government? And then, hey, when you have uranium waste at the end of the day, where are you going to put it? Government hasn't solved that issue. It's like, forget it. Let's just build a natural gas plant and get permitted more quickly. You don't have the headache. How does it happen? Government's job is really to, handle the waste side of it, which ought to be easy to do. And I think the Nuclear Regulatory Agency, in conjunction with the DEP, I think, or maybe DEC, is funding sort of new technologies to make the footprint smaller, to make them cheaper and easier. And I think, hey, that ought to happen. And the government has already been a proponent of that. So hopefully we'll see it. But yeah, it's a big ask, but like as a world, we need to do it, because it's like, as I sort of said, the alternative is tripling the cost of power without probably doing much to the environment.
Yeah, and everything falls out of energy, right? Everything that gets built, the incredible world that you see around you, is because we have the ability to utilize energy more efficiently. And our society today utilizes energy much more efficiently than a society from 300 years ago. And it allows us to do more with less of a human input and create a much better world that can support billions and billions of people. So this has been an unbelievably interesting conversation. I have one more question, but before I ask the last question, are there any places online, or I guess any last things you want to say about Stronghold before we dive into the last question?
Oh, sure. Hey, I would just say it's been a super interesting year. We've been public a year. Come this October 20th was our listing date. So we've done so much in the year, but I think our most exciting days are ahead of us. And I would just say, for investors, we are set up to survive crypto winter, and have done things to make sure that we get through to the other side, which we're all in. When will it happen? As I said earlier, it's tough to know exactly. At some point, you got to be bullish, but I would just say, hey, if you're interested in Bitcoin, mining is a good avenue to get exposure. But in comparing one miner to the next miner, don't just say, hey, this guy can produce 200 coins a month or whatever, and think that that's a great metric, because those 200 coins might be costing that guy the equivalent of 250 coins to make them. Or that guy might have debt, probably has debt that makes the equity worthless. So I would say it is a very important time for investors to do their own work. I wouldn't even trust like research reports at this point, because having read them all, I think people are missing some sort of key fundamental aspects of the business that will determine whether or not these companies survive and thrive or not. So I think I'm excited about what we're doing, and I think in the next 2 quarters, I think it'll become more evident to the market, where we can just sort of show, hey, here's what we've done and here's why it made sense. But we'll see. I'm mostly enjoying it, actually.
Yeah, and I will echo that sentiment. I do think that when the markets are down, when you're in the bear markets, it's crazy to see how important timing is in this market. And you definitely don't want to be going into mining during the highs and the peaks of the bull market. A lot of times I think that you'll see things get overvalued, but just like it swings upwards, I think the pendulum swings the same way downwards, where you can find and scoop up some incredible deals during the bear markets. And I think that that's how you see a lot of people doing really well investing in this industry, rather than, you don't want to be the grandma that goes and hears about Bitcoin and is the last person to buy it at the peak right before everything falls. You want to be in it at the times where there's blood in the streets and things aren't as pleasant on the outside, but the fundamentals are still there and actually better than during the bull run. So yeah.
Absolutely, you're right. I bought stock. It's in the public record. I bought stock 2 weeks ago personally, having like my salary is gonna be paid in stock for the next year at least. So hopefully that reflects my view of prospects of the company.
Yeah, look at actions instead of words, as a lot of people say. So the last question is, what is one belief you hold to be true that the majority of people would disagree with you on? It's a very tough question.
I mean, that's the kind of question you gotta get it have it answered. You know what I would say, if I'm an expert in the energy space, which I am, it's my whole life, I think it would be probably that if you looked at the impact of like oil on the world, I think it's been demonized as a commodity. But if you were to study like standards of living and the availability of cheap energy, so not just oil, but sort of cheap fossil fuels, well, it's certainly, you could argue it has had its complaints related to carbon more recently. But I think a lot of the standard of living improvements globally are a result of that same cheap energy. And if you looked at the difficulty of sort of growing a standard of living, like we're now in an age where we are going to be tripling the cost of that, the access to that cheap energy. And I think it's probably going to result in a reduction in standard of living that I think is really important for like the fabric of society and for like global financial health. So I think if I probably have the minority view that fossil fuels have been the most important sort of contributing factor for the global industrial growth and the benefits that has resulted in for all of us.
Yeah, that's a great answer. I'll share with you in that minority opinion here, and we'll close it there. Thanks again, my man.
Hey, pleasure meeting you. Thank you.